Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update. Johnny, let's get right to it. We're looking at Manhattan supply. The market is shifting. Not so much supply, though. 6,412. Johnny, show me that chart.
Yeah, that is what's not shifting right now is supply. It's just sort of sitting there. It's down maybe slightly less than 0.5% from last week, and the week before that it was down 0.2%. So it's not going up, it's not going down, it's just sort of going sideways at the moment, waiting for some direction.
Yeah, and that is actively updated supply, folks. Actively updated supply. We exclude stale listings from that listing, so the shadow inventory or the actual supplies are going to be a little larger than that. Just want to make note of that. Let's move on to demand. Manhattan pending sales 4,649. That looks like it's ticking lower, Johnny. Show me that chart.
It is ticking low. This is about the fifth week or so we've seen ticking lower. So, this is our broad measure of demand. We probably saw the high back in late May or so, and now it's a sort of slow drip on the way back down.
Yeah, and Johnny, I think this is going to just gradually go down for the next foreseeable future. I would not be surprised if in 3 months from now we're looking at this thing and it's in a 3 handle. So I think everyone needs to just get acclimated to the fact that the world that we were living in for the last 18 months of uber high liquidity has changed, and this is now a new world, and liquidity is going to a reset lower level. Where we go is what we're looking for. So that's the key things that John and I are looking out for, is how low does that deal volume go until it stabilizes. Let's move on to the weekly, see if there's any clues there, Johnny. I'm looking at supply, 363 things. That looks like it's down. Show me that chart.
Yeah, it's down 15% or so for the week, but not necessarily week to week is really what's important. I think what's important is just where are we in terms of seasonal levels, and weekly supply is right where it should be in terms of what you would expect for the last week in June. It's on its way down, and I don't expect to see a strong recovery in the supply number, Noah, until honestly, September. I think you can just expect this to keep on tweaking down.
Yeah, exactly. Because what happens during July and August? We don't have a lot of listings coming to markets, right? So we have to wait till that post Labor Day inventory bump. So if I'm a buyer out there right now trying to take advantage of all these macro changes and these shifts, it's going to be at the expense of quality inventory that is priced ready to sell, and that seller is willing to hit that bid that's probably just adjusting a little lower. That's another thing that people need to keep in mind. While that bid is going lower, that is causing contract activity to slow a little bit. We are looking at it on a 1 week trend. I see 221 things ticking down just a bit. Johnny, show me that chart.
And this is when we start talking about the shift. This is where we're seeing it. So again, on a seasonal level, right where it should be, right? This is pretty much exactly what we signed in 2019. But the problem is we're looking at 2021 numbers, and we're down roughly 37% compared to what we signed last year during this week, right? So that was just last year, gangbusters. This year, normal market. And that's where the people are feeling that shift.
Yeah, and Q1 was clearly the peak. Everyone has to look at Q1. This market is different than what it was January, February, March. Okay, it's a reset, kind of a change. It is a shift. That's why we're using that word. And it's all about deal volume, right? It's all about liquidity. And when I look at the 1 month, all right, this is the number I'm looking at, 1127. That was at about 1,500 about 3-4 months ago. So that 30% or so, that's where that's coming in, and that's the big change in this market. And it's the relative change from going 100 miles an hour to going 65. Because when I look at 1127, that is a good number. It's just that we're slowing from going so fast, and we don't know where that's going. I think this is probably going below 1,000, and we need to keep track of this. And if I'm a buyer, I'm looking at this number to time when I'm going to come in and try to get some leverage. So we'll keep an eye on that. Let's now go to the chart du jour. We are going to the rental market. We are hearing things about the rental market in Manhattan and Brooklyn. It is everything you're hearing about the rental market is true, right? We said something about 6 months ago, 7 months ago. I know I put it on social media, on Twitter. I said those rents are going up, and man, oh man, have they been going up. Johnny, this chart is putting together 3 pieces of information in the rental sector. And you got your blue bars showing you new listing activity. You got your yellow bars showing you signed lease activity. And you got the one line that's really just doing its own thing. And that's the red line, which is last ask for median rental prices. Johnny, what are you seeing here?
Yeah, well, I think the real difference is if you look at these blue and the yellow bars, right? And the closer they are together, right, that's basically the blue bars are your supply, and the yellow bars are your demand. So when they're like right now, there's just really no difference. Right. And if you look back to 2021, there was more demand than supply. And these are the things that function is pushing prices up and away. But if you look at 2019, you can see that gap between supply and demand, right? There's a little bit more, a little bit fluctuating, and that rent line's going sideways. So it's going to be a while before this market sort of recovers to equilibrium. And right now, if you're a buyer or you're a renter, you're pretty much you're stuck in the middle.
Yeah, and you know what? This rental market, in my opinion, is going to put a floor, somewhat of a floor to the sales market. All right. So when I look at this potential downturn that's coming in the sales market, I think it's going to be a little faster, more violent coming with the shift, but I don't see us crashing by any means. I think it's going to be another window of opportunity, and I think the rental market's going to kind of put a floor to that. Not only that, John, but the fact that rentals are going up, and the fact that rates have gone up, and that's making the sales market go down, all of a sudden, all cash investors that are out there or potentially out there, they got a golden opportunity for extra leverage, more leverage than they probably otherwise would have had. And I'm hearing a lot of sellers. I'm having a lot of agent conversations coming to me and saying, I got my seller here. They can't get the price they thought they could get 3 months ago. They're going to go rent it.
Yeah.
So you have a lot of listings that sellers are considering putting it on the rental market, and that's kind of keeping inventory in the sales market a little lower than maybe where it should be. And now we're going to bring in investors. And investors are now seeing potential cap rates, and they're seeing potential opportunity here for the first time in a while. You bring that online, that could support the floor in the sales market. So again, if I'm a buyer, right, you're going to get somewhat of a deal. You're going to get a discount, but it's going to be at the expense of all those sellers willing to hit the bid. If you're expecting 15, 20% move downs, you're not going to get it. That's not what we're talking about here, right? If you can get a 6, 8% discount from where we were a year ago, that's what we're talking about here, at the expense of a seller willing to hit that bid. And this rental market is part of the equation. It's part of the mix.
And basically what this chart tells me is there's really not going to be any sort of solution in this rental market until we have a little bit more equilibrium between supply and demand. And right now they're neck and neck. And so when that happens, right, rents are the escape valve, essentially.
Yeah, I don't see this changing for the next couple of months, at least. Yeah. At least. If you're looking for a change, you got to go further out there, maybe winter, maybe Q1 of next year for a change. But the next 2-3 months, I don't see this trend changing. Johnny, thank you as always for putting all this data together. It is really great to see it in numbers and colors. You're doing the industry a great service. So thank you, Johnny Walkup. My name is Noah Rosenblatt. We're both from UrbanDigs. Don't forget, guys, you got questions, we got answers. We got a forum right down here that will address any questions that you see in the market. If you want any of the reports that we've shown today, it's going to be right over here in just a little bit. Other than that, this has been your weekly Manhattan market update, and we'll catch you next time.